know people that are like texting and cold calling and using all these services that are like targeting like 500,000 properties a month and stuff like that. And they're operating similar EBITDA level businesses that we are. And I'm just like, what's up, everybody? Mason McDonald and Dan Haberkost here with another episode of the Big Picture Blueprint. And today it is just Dan and myself having a conversation. We've had a long string of interviews over the past month or two, and this episode, which we're recording on Tuesday, September 23rd, it'll probably come out sometime in October, is just us. And I'm pretty excited for us to have a conversation that will be relatively similar to what Dan and I used to do every day whenever we worked out together every day. Of just thoughts about business, what challenges we're experiencing, what wins we're experiencing, and really kind of where we're headed and just what we're doing that allows us to stay in business and go on trips and live, life. But Dan,
I'm good, man. Just like you, just got back from a long trip. It's good to be home and settled. I really missed working. And I think you really hit the nail on the head of why we want to talk about why we're still in business when so many people have gone out of business. We both know people personally that have gone and got jobs who were doing quite well for a while there. And I think a lot of it comes down to reality is just set in. We're back to more of a normal sort of market, and that frenzy of the pandemic is over. And so what most people were taught, what I was partially taught, getting into the business of the turnaround time and how easy it is to get deals and how easy it is to sell them, that's over in the vast majority of places. And we're back to really what most people who've run land businesses have experienced for, decades.
What I feel like it's interesting for both of us where, you have a partner, I have a client that we'll see, I'll update you guys as it happens, that I might be accepting a job from where I'd still be able to run my own business and everything like that. But I'd be, working full time for this company that has been doing what we've been doing, but for 50 years at, $1 billion level. And I think getting the perspective from some of these more institutional type, and I don't, it's funny to say like they don't feel institutional because they feel so mom and pop, even though they've, done $1 billion in sales over the last, several decades and everything like that. But getting to see how they think, how they operate really makes me think and operate differently in my business because we were sold on a vision that isn't exactly what the reality is anymore in 2025. And I think it's kind of frustrating. I think in life in general, it sounds douchey, but I've succeeded for the most part at everything that I did professionally. And that has gotten significantly harder over the years. Like I jumped into this business, making dumb money without trying, and it's gotten significantly harder, and we're still here. And I think that's good, but getting to learn from people that have been doing it for decades and decades makes me realize, shoot, the way that I started this business, it is not sustainable for decades and decades. It was, I had a good run at the casino and made some bets that really landed, a significant amount of capital that gave me a tremendous runway for years. But if I continued that way, and I probably continued that way a little too long, I would have gone out of business just like people that are, sending in group messages and posting on Facebook of like, I'm out, I'm leaving and getting jobs just like Dan.
Yeah, man. I think a good illustration of this is what just happened in a transaction that you and I are both involved in. So if anyone listens to our show, you've probably heard about the subdivision I've done in Colorado, 640 acres, split into 16 lots. Well, none of them have sold yet. One of them is under contract now, but at the time of a couple weeks ago, none of them had sold. And Mason actually had a client, the company he was just referring to, that offered to buy the whole thing at $1,000 an acre. So 640. I bought this thing at 410. Mason didn't want much of a commission, so we're looking at about $200K in profit if I were to take that. And I have a partner, as Mason referenced, on that deal. And when I told him about it, he's like, no, absolutely not. That's a terrible idea. He said, you can do whatever you want. You're in charge, but I don't think you should do that. And, we talked it through, and that's the biggest difference is the people in the business for a long time look at a much longer perspective. And it's not this, what's sold on social media is send a bunch of mail and make a bunch of money in 30 days. The people that are doing this successfully, they take a much longer term perspective. And if you buy a good deal and it doesn't sell for 6 months, or you don't start making sales for 6 months, it doesn't necessarily matter. So it's more about just buying desirable lots at good prices and setting up good debt against those lots. At least that's how I'm more being taught, this kind of second generation of my business. And then, you don't have to capitulate on price much. And if it takes a while to sell, that's okay. And you can more just think about continually stacking up your inventory of nice lots you got at a great basis. You can sell over time.
Well, and from what I'm learning from my client, I mean, dude, I market more than most realtors do whenever I'm selling a piece of land. And same, but it's like a few $100 on mailers to all the neighbors and, posting good videos and all that kind of crap. These people, like, they're doing another sale this weekend, in Southern Colorado, which, I think it's funny. And we'll talk, Dan and I are probably going to have a pretty long conversation. So we hope you guys stick around for the whole thing. After traveling so much, I'm very happy to be home and be working again. 2 weeks in Portugal was fantastic, but I'm tired and we have a new puppy. And so I'm very tired. But they're spending nearly $250,000 advertising for this. And that's like the gross proceeds from like 5 lots that they would sell. Granted, they're selling enough to where it's like, it's part of the business. And it just reminds me that if you operate at an actual high level, it's okay to spend a tremendous amount of money, because different, I feel like, to the way that Dan and his partners operate, they sell out, these developments in a day or two. So they're selling for a lot less per acre typically, but they're selling so quickly and they're spending so much money on the advertising, they're able to move it really quickly. So it's like they'll make $1 million a month, in a particular state that they're operating in, give or take. And I think that right there has really made me reconsider just a lot of different things. And I think that's the challenge with this, of what kind of business do I really want to run? Is it something where I make a couple bucks doing quick flips really, really quickly? Is it something that I have paying me on notes, for decades to come? Is it something that, or some mix of all of it? Or I don't really know. And I feel like, we'll probably get a little bit of clarity on our own businesses after this conversation.
Yeah. I mean, for me, I see what that company's doing, and they have some really substantial resources, and they've really got that marketing system dialed in, which is what would give me hesitation to trying to do that. Like with my little subdivision, is I don't have the confidence to go below 50, call it 50 grand on a bunch of marketing, because I'm not sure. I would want them to hold my hand through one or two, or somebody like that. So, maybe I'll get that through you in a way. But yeah, I think just thinking for the long term is probably the biggest change in my thinking, and also trying to get the most possible out of a given, a nice piece of land, right? And so, again, this big subdivision, or not big, but this tract in Colorado, not taking that quick flip and that quick cash, selling all these ideally on terms, 10 to 20 year amortizations at 12% interest. I mean, we're going to end up getting more like $1.1 or $1.2 million out of these, including the interest, as opposed to selling it at 640. And granted, it'll take time and there'll be some holding cost, but it's dramatically more. And so I think just being slower to sell good pieces of land at any sort of discount is another thing that I've learned from this guy as well.
Well, and you guys operate as the bank. And I think that, in thinking long term about what would be the actual most sustainable business that you can kind of create, it's, I think, a lending institution where, so if any of you guys are listening and you have banking connections that lend on land at a significant level, the ability to, deploy multiple million per month for rural land, specifically in Colorado, reach out to me. Because we need those connections in order to continue to offer the products that we're offering right now. And there are so few resources. Like, we're probably going to have to go West Coast or East Coast to find these, because We've like used every bank in Colorado. And I think that long term, that is really where I see, the most successful land people ending up, is the ability to come together and create an actual bank that is able to lend on these. Because I hear what you're saying, Dan, of like, it'd be fantastic if you could sell all of these lots. Maybe it takes a year, 18 months or something like that. Your total return is going to be, in the seven figures or not your total return, but your total sales proceeds are going to be in the seven figures, which is double the price that we offered. Or even more depending on, how long these people actually take to pay off versus their payback period. But if there's a bank that's able to come to the table of like, hey, I'm going to sell all these in 18 months and at the full price, which you're able to get that price because there's good financing solutions. And you have a bank that finances it, so you just get all of the capital back. I mean, that's huge right there. I think that's why it was such not challenging. I feel like you were able to come to the decision pretty quickly, but it is painful sometimes to be like, oh shoot, money now versus money later, bird in hand versus two in the bush. But if you can have both, like if you can actually have your cake and eat it too, that's really huge. And I think that on this deal, correct me if I'm wrong, this is the first time you've used bank financing to actually refinance, but essentially acquire a piece of land for a project.
That's correct.
And that right there is something that no one talks about. Bank money is the cheapest money that is out there typically, unless you have like a rich relative that will give you a 1% loan or something like that. And I think that is another reason that we're still here in 2025 is like we're using lines of credit through our investments or through our banking relationships that we currently have, and we're starting to use more standard loan products on the acquisitions or dispositions of developing these banking relationships to help sell our land. That I think a lot of people are not. They just don't think about it because they're so anti-establishment, anti-corporate, anti-education. And I think Dan and I don't know what your credit score is, Dan, but like I think both of us have probably really good credit scores. And I think that makes us a little more bankable. And I think that makes it so where we have the ability to survive in the long term.
Yeah. No, agreed on all those points. But I want to make a counterpoint to everything we just said, which one thing that I think all of the online content and the gurus teach well that many of these older companies don't know how to do at the same level is go and get extremely good deals direct to seller. And when I think of everyone I know that has one of these bigger businesses, other than my first ever mentor, that's what he was an expert at, but he didn't build quite as large of an organization. They buy everything on market, or maybe when foreclosures were more prevalent, they were buying at the auction. But the idea of contacting those people ahead of time that were going to get foreclosed on, or had tax liens, they didn't know how to do that. And so I am excited by what we can build here, taking the best parts of these older businesses and what they've done, the strategy, the debt, the long-term thinking, and then combining our ability to go and get killer deals direct to seller. It's mixing the best of the new and the best of the old, at least as far as I can see. And perfect example, your company was going to pay $640 for that parcel that we paid $410 for, and they were going to do the same thing, which gives an idea as to how much meat is on the bone there. So I'm excited.
And that right there is the most beneficial skill that I think either of us have developed over the years, is the direct to seller. That is what the more institutional type people, they just don't get, because they're not doing all the stuff that we're doing. And I feel like I see videos of, as Dan and I were coming up with a topic for today's episode, where I always check YouTube, look at land investing podcasts and videos and see what's performing really well. And I saw these videos of like, here's what works in 2025 and what doesn't. And it's like a graphic showing like direct mail, is bad. And, AI and like all these like buzzwords and stuff like that is really good and cool. And like, that's how you succeed in the space. And I think that, it's just, not exactly true. And I feel like that's what gets us noticed by these partners that are operating at these 8, 9, 10 figure levels, is our ability to go direct to seller. And Dan and I preach on it through and through that, the sales conversations and sales skills, I think there is a certain natural inclination that people have that will get them to succeed in those positions once they get those sellers on the phone or meeting in person. But at the end of the day, like what Dan and I are doing in our businesses still in 2025 that is still working and still working very, very well is direct to seller marketing and cold calling, and not doing it at such a massive scale that it like is overwhelming or will lead to litigation or something like that. If like we know people that are like texting and cold calling and using all these services that are like targeting like 500,000 properties a month and stuff like that. And they're operating similar EBITDA level businesses that we are. And I'm just like, I don't know. I think whenever we think about the businesses that we want to build, it's so focused on the actual product, where it's a question that I love asking other people that own land businesses is, do you view yourself as in a product business or as a service business? And oftentimes people will say a service business. They get this like moral high-mindedness or justification of like, I help landowners part ways with their land for 30 cents on the dollar. I'm like, no, that's not a service business. Like your skills are incredible and everything like that, but focusing on the good product is what's going to keep you around and being able to get really effective at that direct to seller marketing. Like Dan's right of we're able to pay more because there is so much meat on the bones. That's just a metric that we use of that 1,000 per acre. But Dan getting it at that discount and being able to sell it for triple, I mean, that's insane. Like it's how you really, really succeed in business, because you're able to make bets that are so asymmetric because your discount is so low.
Yeah, that's key there. The asymmetric bets. When one of the things I put on the sheet for today's show is, we talked about we want to talk about different challenges right now, and just making decisions with such uncertainty and such fluctuations in the market is a lot harder. And, talking to, again, people that are a bit more experienced than myself, if it's a good deal, it doesn't matter if it's necessarily in demand right now. And I guess good deal isn't the word I was looking for, a good piece of land. There was one in Florida I bought. It went through quiet title, so that took a long time. Florida has really slowed down for us this year. It's in the Panhandle, which has been really slow, and I was hesitating on buying it. But, my realtor checked it out. Nice lot, nice neighborhood, water, power, everyone's septic there, which is normal, flat, high and dry. And so I thought, no, okay, I'm going to buy this because someone's going to want it, even if they don't want it right now. And we're getting it at a good basis. And so, just to really simplify things, that's kind of our heuristic, right? If it's somewhere that's in demand, right, people are still moving to Florida, not quite at the same pace, but they certainly are. And it's a good piece of land, I'm going to buy it because we're getting it at a good deal. Regardless of whether the market there is slow at this moment in time. So,
well, I feel like it's, I hesitate to call you lucky, but I think you getting started prior to the pandemic was probably really beneficial because you got to operate, at least for a little while, in a normal environment. And myself and so many other people that are doing like kind of this online remote land flipping model, got started during or after the pandemic has really skewed the expectation. And I feel like that's been one of the hardest mindset hurdles to overcome. Like we can talk about it and be like, yeah, it doesn't matter. But Dan turning down 200 grand, within a partnership, to make a lot more over a long period of time, like it's still hard to do something like that because it's, that's still a lot of money. And I feel like we've kind of depleted all of the dopamine that we have from winning in the land business by doing so much volume over the years. But being able to operate, having seen multiple market cycles and assuming that markets are cyclical, which means there's like a circle. If you don't know what cyclical means, that it's going to reach a certain level of normalcy that we see in these, this phase of the market cycle. I mean, interest rates are starting to get lower. Fed continues to cut rates. I think interest rates today are like at 6.3%, which is right around where I purchased my first home back in 2018, on an FHA loan. So it's normal again, which means that we have the opportunity to succeed in this space because everyone operated in only this like skewed black swan event environment, which is why so many operators have fallen off the table and gives us a lot more bandwidth to do more deals because the competition has really fallen off.
Yeah, it's an exciting time. I've said this a lot, but I want real estate and land to be off the radar and not be a sexy thing that everyone's running to, which I think has finally happened. And at the same time, you talked about cycles, and so there's more I could say on the topic we're just on, but I had to bring this up. So we had a market in Florida that had really slowed. I've had a bunch of lots there sitting all year, and they are listed way below comps from where I bought them. And then finally here about early August, we started getting offers, turned down a couple people made offers and then backed out. And then they both just sold. And there's a third one I have there that now we're getting offers on that. 2 of them in the last week. And one of them today, I'm hoping we actually can make a deal. So everything's cyclical, to my point earlier about buying good lots regardless. And I think there's going to be an opportunity because rates just tick down. And this is such a psychological game we're in because we're mostly dealing ultimately like with end users, right? So builders are going to buy these lots because the end users bought the houses they built and they need more lots to build on. And so it's driven by just market psychology or, end user psychology a lot. And I think we're reaching an inflection point, a lot of places where people are getting some FOMO, or maybe it's because their neighbor bought a house or their friend and rates are dropping and they're jumping back in because we've just seen a big pickup in the last few weeks. At the same time, there's a lot less people on our end of the business going and getting deals and marketing to sellers. So yeah, I think, again, it's always back and forth. I fully expect October to the first of the year to be slow, but I think we're reaching a little bit of an inflection point.
Yeah, and that's what's funny about human psychology is I and a lot of people I know, and I assume you're in the same boat, is say mortgage rates on a 30-year fix dropped 5.75% or something like that. I am not adjusting my seller financing rates that I am charging. However, and people will still buy land with the seller financing terms that we're offering because the mortgage rates at the national level have dropped. And I think that there is so much fear associated with all real estate transactions. Everyone's afraid of the market being able to, or market crashing, or whatever it might be. There's so many headlines that are negative. And we've talked a little bit about the land flipping headlines of, operators falling off like flies over the past probably 2 years or so. But when people see more positive real estate headlines, they're more likely to look at real estate again. And I have no data on this. This is entirely an assumption, other than I've seen an uptick in activity and inquiries on the properties that we currently have. And there's a seeming correlation between the positive real estate headlines that have been going on and our ability to sell lots. And I think that what is continuing to happen and is fixed regardless of market cycle, it's a majority of the large landowners, especially a lot of the large rural properties that we're targeting and that we're buying, that demographic is continuing to age. Every year they are a year older, and every year they are wanting to sell more and more because their kids or their grandkids have zero interest in the land, which gives us a unique opportunity because I think it's called the great reshuffling or whatever. There's hundreds of millions of acres that are changing hands over the next few decades. And that's really how we're thinking about business right now, is regardless of this market cycle of, rates have ticked down, just a little bit. There's 100 million acres that we're targeting over the next 20 years. And yeah,
it is. It's funny. I listened to a podcast while I was eating breakfast right before we got on here. And these were really experienced hosts. A lot of them have been in the business nearly 30 years. And the topic of land came up. I forget why, but they were all talking about how risky it is. And everything they were saying was pertaining specifically to land that a builder or a large builder or developer would buy to do some sort of subdivision. And it's in a lot of people's minds, that is the only type of land that there is. When you say land, they think of, okay, a large scale entitlement project. And I would agree. Those are generally pretty risky. Yeah, even if you get it at a great basis, the government can always hold you up. Things can get delayed. And it just goes to show the beauty of the space. I'm kind of just getting off on a tangent because I just heard this, but because what we're doing doesn't pertain to that in any way at all. What we're what we're doing, I mean, is either infill lots where all that work's already been done. It's just a small builder who knows they can get a permit for a regular house is going to buy it, or these rural tracts. We're doing a bunch of acreage in the Carolinas. It's not an entitlement project. It's just a place that a normal person's going to buy it, or an investor who might put a mobile home there and sell off the package is going to buy it. It's just a totally different space, and that whole segment that we're in of the business is often just forgotten about by a lot of people when they talk about land. And so even through the ridiculousness and all the attention that land has gotten the last 5, 6, 7 years, I still think it's fairly unknown, at least what we're doing.
The longer that we're in this business, the funnier it gets, because you just have more and more conversations with more people that are either operating at a high level or sellers that own a significant amount of land. Where I had a conversation with a seller maybe a month or so ago that owns about 10,000 acres just east of town. Young guy, very proud of himself. Very, actually, just one of those sellers that are very, very frustrating to talk to. Wanted an offer, gave him an offer, and then he sent me a lecture. He sent me a poem too about like the value of intrinsic things or something like that. And he, I told him of like, hey, we're interested. Our business model is this. I fully believe in operating transparently. I think that's another thing that has allowed us to succeed, is just our offers being transparent of, this is what we can pay. If you want more, this is how you get more. But I told him the bit of buy the ranch and sell it by the pasture, and that just infuriated him to the nth degree of, you're ruining everything and stuff like that. And I think it's funny of getting more and more perspective of how to approach these different people in different ways, because this product is something that, for us, we're like, it's totally overlooked, but to the individual seller, it's what everybody is doing because that's what they hear all the time. And there's regulations that come in play. But I do feel like finding that niche where there's minimal regulation and being able to, it's overlooked by the institutional guys, and it's overlooked by the small people that are kind of destroying a lot of the aspects of the business, has just continued to grow, and it will continue to grow because it's only so scalable. And I feel like that's something that I enjoyed that Hormozy talks about a lot, is like find the, aspects within your business, or find businesses that are not scalable. Because it's just so one-on-one and so long-term that allows us to continue to do deals over and over and over again, even if it's only 1 or 2 deals a year that, makes you an extra $1 million over a lifetime.
Sure. Yeah. Well, let's get tactical here, because I have a bunch of things on our note sheet here I think we should talk about. We put what it's really like to run a land business in 2025. So I want to talk about some of the challenges. Obviously, the market has slowed. I still have a lot of money stuck in lots. South Carolina, Florida. There's one that you and I have together. And that sucks because the irony of the current situation is there's a lot more inventory and sellers are more willing to negotiate for the first time in a long time. If I could sell those stupid lots and just get my cash out, I would be I'd probably wait till after Halloween. And then I would go nuts making offers on nice real estate, whether new or newer, between Pueblo West and Colorado Springs. But it's challenging because I have so much going on and I have so much cash stuck in lots. So that's a big pain in the ass right now. And that's one of the downsides of this market, is these lots would not be stuck if it were 2021 or 2022.
Well, and I feel like, same thing of, I've got a good amount of money stuck in a good amount of land deals they're just sitting. And that's in the markets that are doing really well. And sometimes it's hard to say of like, I wish I had more data that I could point to of like, why are these lots selling? And being a broker now, like there's only so much data that I have additional access to now. And I'm like, I've got really great lots that are just sitting. And I am selling lots that are worse than this in my mind, that like crazy. And it's location, location, location at the end of the day. So even if it's in the same market, it's two streets too far south or whatever. But I do feel like um, it's hard to say because I don't want to contradict myself over and over again. But do I regret buying some of these deals? And the answer is probably yes. I think that um, there's deals where it's like it doesn't matter where how much you lower the price or the amazing seller financing terms that you offer, they might not sell. Like I've got one in Pahrump, Nevada that I don't know if it will ever sell. And I think it probably will eventually, if like the water line gets extended out there or something like that, but that's not like where I want to bet money, and it's low. It's like a low investment or whatever. But I do think that, that is one of the challenges that we're experiencing today, where I feel like there's, data that shifts overnight. And so whenever you're picking a market of like, you have to look at the past, but you really have to figure out how to, I don't know, project into the future a little bit and determine what is the future demand within this particular area, because otherwise, you're going to get stuck with these dud lots. I don't know what your thoughts are on that, Dan. Like for those deals that you have that are really sitting, like I don't know if you have any that are sitting for longer than a year or two, still, but what are your thoughts? Should you have bought them? Was it a bad decision, or was it like a good decision?
It's a mix. There's 5 contiguous lots in Florida that I don't think really were a bad decision. I think we missed a few things on due diligence, but they're still buildable, and I still think they'll sell, and that area is just really slowed. There are also, ironically, 5 contiguous lots in South Carolina. These are both small lots. Long story short, the realtor that we thought was competent in the area was an idiot. She was totally wrong. We had to get a variance to make them legally buildable. Thankfully, they are now buildable. And I think those will eventually sell, but I would just call that a mistake because we didn't know we didn't know there. And I wouldn't have gone through that process and bought those in hindsight. And then, there's that one you and I did where that market was turning like crazy. And that was just a market issue. That's it. We didn't really buy badly. We didn't buy as low as typical, but we really didn't buy badly there. And then there's this one that was just a due diligence error. And I have like 70 grand in that one. So, which kind of sucks, but I'd still think I'll sell it on terms to someone eventually. And over the course of years, get an okay investment there. But, yeah, so it's a mix. A few of them were due diligence mistakes and a few of them were purely the market changing.
Well, and on the flip side of it, I feel like this year, I've had a handful of deals, and I'd have to like go back and look at my deal sheet to remember. I think these were a lot at the beginning of the year, that were really great deals. Like, do you have any in 2025 that in particular that stand out and they could have been acquired in 2024 or anything like that you were like, these were some of the better deals that I've done in a while. But they're potentially a little bit harder to recreate. Cause I think that is one of the themes we're talking about is like, some of these deals are, I don't know, feel a little bit more unique.
So what deals have I done that did go through, or you mean deals I thought were really good?
Like in 2025 in particular, some of the deals that you have that like stand above the rest as some of the best.
Yeah, we bought a mobile home, a lot with a mobile home on it in Colorado at like 37 or 36 all in, and sold it at 90 a month later. Sold it on terms with 40K down. So most of the profit is coming, but that's been fantastic. There's another one out there we bought at like 26 or 7 and sold it at 58. There's that one you and I did through Ground Up Partners. We bought it 170 and sold it like 290. The one I bought that we've been talking about at 410, that's collectively, probably going to sell close to $1 million, 900 to $1 million. And yeah, it does feel difficult to recreate some of these, but I mean, at the end of the day, I think it's just talking to enough sellers and it's feasible. We'll get more great deals like that.
Yeah, absolutely. Well, and I feel like looking back at some of the best deals that, we've done recently, I don't know if it feels the same for you, but they feel more unique for me. like that ground up one that we did that was like more of a timber deal than anything. Some of these weird ones where uh, like they had like an old shed on it or an old well or something like that. I feel like have done really, really well. Even if it's just like a shack, it's weird where sometimes like having just that like little structure creates some vision within buyers' minds that there's more opportunity with the land than if it was just a vacant piece of land. And so maybe that's something there to kind of consider of what's uh, additionally working well.
That's interesting because I really think a better version of this business would be doing more improvements. Like these Colorado lots that we're talking about. Maybe if they're a little closer to town, those ones are pretty far out. But if I get that deal that you and I were talking to before the show, where there's a 200K gap between what the seller wants and what we can offered $1 million, they want 1.2. I think that's one where it could be totally worth grading in a driveway, paying for a well, and stubbing power to a home site, potentially. That's so close to town, the demand is there, and I know people want to put housing there. So, to your point about finding those, I think down the road, as we have more and more capital resources, doing some of those improvements ourselves would be a great, great strategy.
Yeah, yeah, and I feel like I think that's a really good point because one of the groups that I work with, advertising their properties, they offer financing up to $50,000 for the improvements of well, septic, and electric extension, and that draws a lot of attention to it. But I feel like the inquiries that I field most often is, is there water already on the property? Is there septic already on the property? And I think if you can make some of those marginal improvements, I feel like people that we know that have been in the business for a while that are succeeding, they're drilling test wells whenever they're doing these different types of developments and stuff like that, because that just creates that reduction in fear that we were talking about a little bit, where it's kind of similar to the mortgage rates dropping of like, oh, now it's a good time to buy real estate again, of, oh, it's a good opportunity to buy this real estate because they've drilled the test well and we know that there's water there. And I don't have to spend that money drilling a test well. And then if a dry hole shows up, that I'm going to get screwed. And so I think continuously focusing on the product and enhancing and making the product better and better and better will allow us to, continue to move in the right direction with these businesses that we're building. I think we've said it before. I feel like we probably said it in 2024 and 2025, like the standard, just like quick flip model of doing no level of improvement whatsoever, even though, that's what both of us started off a lot of our deals with. I think in the long term, it's not going to be sustainable.
Yeah. I mean, I think those will always be there, but relying only on those is not great. And I think you set me up for a good pivot here because you said, is that deal we did in South Carolina, can we duplicate that? And this takes me to one of the big issues I have under our challenge bullet point, which is title issues. And so we have one in South Carolina right now. We're under contract at 80. Everybody's on board to sell. This thing's going to sell at like 280, but it needs quiet title. So this has been one of the biggest hurdles for us probably the last 12 to 16 months. And it's hard to figure out exactly what the change is because we used to do more deals in Florida and Colorado. And these are acreage tracts in the Carolinas that we've run into this most. So maybe it's market specific, or maybe that's just correlation, not causation, and it's just something else. I don't know. But one of our biggest challenges has been getting great deals, contracts signed, sellers are on board, and an unsolvable title issue comes up. Now, again, quiet title's doable. I've done it before. It's just going to take 9 months in South Carolina. And if we can close that deal and make $200,000, that's fine. But this has been just constant. We had two fall off, or one fall off because it showed a road online, but technically that road was not anywhere in the chain of title. And so it technically doesn't have access, and the neighbors wouldn't respond, and it wasn't enough to take it further. We had one that failed a perk test that the soil was a type that should have absolutely been suitable. And so that really killed that deal. And so that has been one of our top challenges. I mean, we are closing a lot of deals and we're still, selling a lot of deals, but we've had more fall off due to failed perk tests, title issues. I mean, we had, in July or August, we had 4 lots, all fail perk. So I wasted all that money. Well, I didn't waste. It was better than buying it, but they all failed perk and couldn't buy any of them. So yeah, we've just had a lot of weird title issues too that have stopped us from being able to buy lots.
We've experienced that too. Canceled contract in Georgia, same thing. We're buying that 19 lot portfolio where one or two of them are currently have quiet title action going on. So we're assuming the quiet title, which is kind of interesting for us. I've never done that before. So those ones will take a little longer. But I do feel like what I probably need to do in my business, and we see it a lot. Logan Fulmer, we've had on the podcast a couple times. This is what he specializes in, is the much more complex stuff rather than like a simple quiet title action, but of determining when it makes sense to do it versus not do it. Because for you, I mean, spending $1,000 or $2,000 on quiet title action whenever there's potentially, 6 figures in upside and you're more than doubling your money on it, it absolutely makes sense. But I feel like so often there's these deals where it's like just a good base hit, buy for 10, sell for 22, and then it needs quiet title. And right now I'm just not doing them. It does not make sense. And I feel like, you said it kind of at the beginning when we were starting the conversation of like, this is normal, like the market's normal, but this is just like the normal day-to-day operations of most of these deals are frustrating. Like it's very rare that we just get like a very simple acquisition and a very simple disposition without having to get creative in some way, whether it's creative financing or, on the acquisition or dispo or some sort of title issue that's going to come up or some sort of seller that is just difficult to work with or buyers that are difficult to work with where like, I mean, it perplexes me sometimes of like, you'll meet with these people, you have a conversation, you have a handshake, and then they just fall off the face of the earth. And you can follow up with them forever, but it's just frustrating. And I think it's determining what your frustration tolerance is, probably needing to increase it, but also determining when is it worth the headache. There's a lot of deals that I've done that I've made money on or will make money on, but it's just not worth the stress or headache at the end of the day. Maybe that's a mindset issue or a stress tolerance issue, but I think one of the things that I really wanted whenever I created this business is more of a lifestyle business. And whenever deals are constantly going quote unquote wrong, it ends up not being worth pursuing those types of deals. Someone else can make the money on them.
Yeah, I think you just need to have a threshold of it's got to be profitable over a certain level for it to make sense to take on some of those title challenges. Now, there are ones where, we thought the solve was going to be simple and then more things pop up. And before we know it, it did take a lot of time and it probably wasn't worth it, but we're almost there. So we just finish them and do the deals anyways. But yeah, I think just focusing, one of the biggest pivots, this is so simple and it seems almost stupid that I'm saying this, but I'm just being way more intentional about only targeting lots over a certain value. And then it's just, when you close deals, they're better. So, yeah, go ahead.
Well, on that point though, is like, I feel like one of the greatest reasons that CEOs fail is the sunk cost fallacy. They don't know when to stop. And on that Texas deal, like, dude, at the beginning, we got offers for higher than what we sold it for, a year and a half later or whatever.
That's fine.
And it's like, if we could have gone back and been like, oh, let's just take the loss now, I would have done that, but you never have that level of foresight. And so it's not allowing yourself to get deals where the profit is so slim that if there is a worst case scenario, you end up taking losses. And with that being said, like, it's normal to take losses in business. Like, it's fine. Like, you're not going to win every single time. And if you put yourself in a position where you're so afraid of losing that you never do anything, you're never going to actually be able to run a business. So we're still taking.
I'm glad you brought that up about not taking on slimmer deals. So I, at the beginning of the show, mentioned some Florida lots that are finally selling for me. One of them I sold on terms, and it'll amount to like a decent interest rate. After paying realtor commissions and stuff, it was a little bit more essentially I'll just get 12% interest on my money. So not terrible. So that's okay. Because I sold on terms. And then the other one I lost like a couple grand on. And the thing with those markets or those lots in that market, it was one of those markets where everything I got, and we're talking, I did probably 15 to 20 deals there. So a decent amount. Everything I got would sell overnight. And so we took slimmer margins. They tried to assign them to start actually, because we'd done a bunch of assignments there. And then I thought, okay, well, there's no way to lose because everything sells here. So I closed them. I closed both of them. And I'm just not going to do that anymore. I'm not closing on slimmer margin deals ever. I mean, ever. So that's a lesson learned. Even though I got away with that for a long time, I did a ton of deals in Florida, or maybe it was like buy for 30 and sell for 50 because it was a really hot market and I'd sell it quickly. But that's a dangerous game. At least right now, if the government starts going crazy, printing money again and interest rates tank, then maybe I'll start doing that again. But for the current market, I'm staying really conservative.
And I feel like what's tricky about that for a lot of people is you end up saying no way more often than you end up saying yes. And so how do you adapt in your business to actually like have income coming in? Because that's what I did. That's why I got licensed okay, here's, and I think a lot of realtors would laugh at me of like, here's a way that I can consistently make money is by being a realtor and being able to broker more deals and stuff like that. But that's been really, really helpful just from a stress tolerance of, okay, here's an extra, 10 to 30 grand a month or whatever, just brokering deals. So I can continue spending money in, the business and continuing to acquire the really good deals whenever they come through. But if you get more selective, you still need income coming in. And that's what's really challenging is that people put all of their eggs in this one basket of these quick flips or, wholesale deals or whatever they are. And then whenever the market shifts, they're not able to generate any income, which then they stop marketing. And when you stop marketing, you end up dying. And I feel like that's something that, we've all experienced in business of like, why am I not getting deals? And it's like, well, because you haven't been, putting the work in for 6 to 9 months. But I think, I don't know. I think the expectation management is something that I really want to keep driving home throughout this episode is that in order to succeed in 2025 in the land business, you need to manage your expectations and have additional money coming in from some capacity, whether it's a bunch of notes or additional ways to, broker or make quick money. You're not going to be able to survive because it doesn't, most lots aren't selling off in a day or two.
And to be clear, you can still find those honey holes, right? I am selling one more lot this week in a neighborhood in North Carolina where I think I flipped 10 lots in 3 months or maybe 11. And these weren't huge deals. They were like 7 to 12 in profit each, but they all sold within a couple days on market. So that's still great. That's still nice. So you can still find places that are really busy, which I think is a good pivot. I had Dispo under challenges on our list today, and I put something that's two-sided, which is more term sales. So I'm selling more on terms, which is great. I sold a couple on terms in the last few months. It's like $4,500 a month in recurring revenue for 5 years if they keep paying, and that's great. But liquidity can be challenging, especially with the model that we have where, okay, I still pay my acquisition managers out. Some of them had realtor fees, some of them didn't, but there's a lot of cash that still is in some of those deals. And by any normal metric, these are just fantastic returns, but it's not like I got 100% of my cash out. A few of them I had to come out of pocket just to close. And that's challenging. It's great to have the recurring revenue, but it's a liquidity challenge. And this takes us back to the whole conversation about setting up good debt, which can solve that problem, but that's not easy on one-off deals. Well, let me pause there. I have more to say, but anything to say to that, Mason?
No, I think tactically something that you can really do to make it so where you don't run into those liquidity challenges is because this I feel like is where you're going with it a little bit is being able to get good debt on these deals whenever you're selling them and stuff like that. Like you have to be bankable as a person. You potentially like should check yourself if you're looking at getting started in business. And if you have like a 400 or 500 credit score, like it might not be time. like you might need to kind of get your credit rating in a better spot and make as much money as you can, go work for someone else, get in a, good sales position or something like that, because it's hard, like being a business owner and just like going and getting normal stuff. Like at the very beginning of, like, my wife had to co-sign the loan on my truck whenever I first got started, even though I had, a multi 6-figure income the year before and had 6 figures in the bank. Like I couldn't get a loan, and that's with an 830 credit score, because I was a business owner. And I think that whenever you are building a business like this, in order to become bankable, like you just have to have decent credit. So I know that's not exactly where you're headed, but like I did feel like that's a tactical thing that people really have to
That's
consider.
interesting. I've never missed a payment on anything, and I've never had over 800 score, but maybe it's because I have 10 mortgages. That's probably why. Yeah. Um, anyways, well, the other thing I was going to with this, pertaining to the challenge at Dispo today, is I think having that built out is more important now than ever. Because for a long time, I sold pretty much everything on market or Facebook so quickly and easily that all the point of challenge in this business was really on the acquisition side and the money side. And that's not the case anymore. And so, Mason and I had Chris Clark on a few weeks or months ago, depending on when this comes out. And he's built us phenomenal Dispo websites, and we're spending a lot more time there. And that has been huge this year. Some of these properties, actually quite a few properties, I have sold via Facebook buyers that had been sitting on the market. And then, of course, Facebook funnels to the nice website. And so I think if you don't have a Dispo platform, or you aren't a realtor yourself, right, with in-house listings, you're going to fail. You've got to have a good dispo system. And I've seen this too with a number of friends who've never sold anything on market. They sold everything. And we're talking people with a lot of experience, hundreds and hundreds of deals, everything direct to buyer. And so it doesn't really matter if the market's slowing or slower in that area, because they've got that so dialed in, they're still killing it. So this is something I'm working a lot on, and has been kind of newish to me. When I first started, 7 years ago, I was selling everything myself, but that was pretty brief.
Where do you see it evolving into? Because when we're talking about Facebook right now, we're talking about Facebook Marketplace. We're not talking about running ads on Meta, Facebook and Instagram, or radio or TV or what. And it's like, if you analyze the buyers and who's buying, like what demographic media are they consuming, where are they most likely to see something like this? Because I try to look up land on Facebook Marketplace, and the only listings I ever see are my own listings and yours. So it's like I feel like there's not a lot out there, and it's surprising. I think on certain postings I've gotten upwards of like 2,000 or 3,000 inquiries on them. And of course, none of them end up buying, so it feels like a waste of time sometimes. But where do you see your dispo really evolving? Like what media?
I'm not sure, because even some of the bigger companies I know that we've referenced are still selling a ton on Facebook Marketplace. But I do see some of the established companies having really effective Facebook ads, Instagram ads, and then potentially SEO. But I'm just kind of speculating right now, just finalizing the website and working on hiring a good VA to help with dispos is step one. But I like what the company you're helping is doing with the big promotions of the land liquidation sale. So potentially something like that, but I don't know. I'll have to do more subdivisions with concentrated quantities of lots in one area for that to make sense. So to be determined.
Yeah, no. And I think, what we both probably need to do is spend some time like getting some real numbers, because I know that there's a lot of success that occurs with radio ads. I think billboards would be something as well. And there's certain rules and regulations, but it's like, if you could have a billboard that said owner finance land for sale, 10% down, whatever, I do think that would draw a lot of attention. So it's this funny thing where, I feel like there's this balance that we're both trying to achieve within our businesses of where are the opportunities for like the new age technological implementation for us to outsource stuff to AI or virtual assistants, and as versus the old school of, hey, direct mail using billboards or radio or TV or something like that on the dispo side specifically, to continue to grow and expand this business of it's, some things never change. And I feel like that's the hardest thing with being an entrepreneur and being a business owner is like it's really the boring stuff that works. And there's a lot of boring stuff that we've just not implemented into the business because there's so many shiny objects of, hey, focus on this particular strategy and this with this methodology. Even though, the answer might have been, let's run a radio ad for a month and test it out to see how many lots we could sell. So I don't even know how much that costs.
Yeah, I don't know either. I don't know anything about radio, but I like the billboard idea, especially for my business having the, Colorado branded name. Let's see. What else is on your mind? I have a few other things on my little list here, but is there anything you want to hit on pertaining to challenges or advantages of today's market and what you're doing every day?
Yeah, I think really the main thing that I want to continue to drive home is like being able to operate in a space that's like hard to scale and not a lot of people are interested in, where the successes I'm having as a realtor is focusing on this niche within the market that not a lot of people are willing to put the time, effort, or energy into. So, this episode is really about the land business or land investing, flipping business. But with me being a broker now, like that's one of the easiest ways I've found to make money. And I feel like by focusing on the area that everyone feels like they don't have enough time, like it's making me more money than ever. And so where within your market or where within your business is your competition unwilling to spend that time? The answer usually is just follow up. No matter what business it is, it's follow up with your customers. But I do think that like it's a lame answer, but like if you're going to succeed in 2025, like get on the phone and follow up with every single person. Like you probably have enough leads in your CRM to do more business than other players that are in your area.
I'm glad you said that because that's one other change I've made this year. For these larger deals, a lot of them I'm working myself, which I've not done in a very long time, and I kind of miss it. I'm enjoying it. I'm negotiating with that guy on the 310 acres. And that was fun. I love, I could tell he is experienced. He's definitely a good negotiator. There was a very, very, very long pause after I made the offer yesterday, because I think we were both playing the first game of whoever speaks first loses. And I almost got it. Like he started to talk about, well, I need to talk to my attorney and he needs to look at the blah, blah, blah. So, anyways, I'm enjoying that and definitely missed that. I just don't miss the talking to sellers about a $20,000 piece of land. It's just an unsophisticated person. It's much more fun to talk to these people that are sophisticated and have, multi-million-dollar pieces of land.
Well, what else are you enjoying right now? Because like we talked about it a little bit, of both of us just got back from travel. So if we're rambling or if I seem tired, it's the jet lag. And I think while I had a fantastic and amazing trip, I was kind of by the end of it, ready to get back to work and, continue working on some of these larger deals and then just keep the ball rolling on a lot of these smaller broker deals and, continue acquiring portfolios and interesting deals. But like, there's a lot of day-to-day stuff that I'm neglecting because I'm not having fun. So I'm spending a tremendous amount of time just thinking, what is fun? So what is fun for you right now? Because for everyone complaining about how, hard it is to operate the business right now, like there's still fun aspects.
Yeah, I still find it satisfying when these properties sell. I mean, if it's a good deal, especially, or it's more of a win than I wasn't expecting, I definitely get a little dopamine hit. I don't know. There's a lot of the individual tasks are not fun, but the overarching satisfaction of building something, especially when it's a hard time, is satisfying. I love seeing new construction come to fruition. That's always cool. It's definitely satisfying. I sent my mortgage statements to my accountant yesterday, and just seeing how much amortization is just a savings account, that's pretty satisfying. So to be honest, most of it's not fun. At least in my mind, I'm not having fun with most of these things that I do every day, with most tasks, but I did sometimes enjoy talking to people, negotiating myself, looking at these deals. And then it's more everything around it that's fun, where most of my friends and network are in real estate. Like after this, I'm going to go and see a friend that's in the space. He's going to help me with hiring a VA because he's really good at that. And then we're going to go surfing. And that's what's fun in the business for me. Obviously we met through business. So most of the work kind of sucks and I don't love it, but I love the result.
Yeah, agreed. And I think that's a lie that a lot of people tell, is that it's like really fun being a business owner and an entrepreneur. And it's really not. Of like, it's the boring day-to-day tasks that allow you to succeed. And the frustrating thing about that is like, both of us find passion and joy in stuff that is outside of real estate. Developing meaningful relationships, going traveling, adventuring, having, fun stuff. But I think that with a business that I hope my kids take over one day, like I want to build a legacy business. And I think that's where my head is at, continuing to move forward, is how do I create something that's going to be alive in 50 or 100 years? And I think that that's one of the reasons that we're doing this podcast at all, is it's almost like a audio visual diary of mine and Dan's business that we've been doing for over 2 years now. And we'll continue to release, hopefully weekly plus episodes forever. Even, whenever it doesn't necessarily make sense. Like, we want to help other people figure out whether, land or real estate or creating a business is the right thing for them, and put them within our ecosystem, and help educate you guys and have you bring deals to us, or just bring relationships to us. It's fun to be able to have business partners that are enjoyable to work with. And we've met a lot of cool, interesting people through the podcast and through different things that we're doing online. So I think that this is one of the fun parts of my business, is actually recording the podcast, because it really does contribute, even if it doesn't. Dan and I don't make money off the podcast. We lose plenty of money, producing the podcast on a weekly basis, but it is one of the most fun parts. And, that's the real reason of, like, sometimes I try to like connect it monetarily to, hey, this is why we devote so much time to the content we're creating. But at the end of the day, it's fun for us.
Yeah. Yeah, I agree. And I think about, I don't want to go on this tangent forever, but I talked to one of my buddies yesterday who's in the business, and I realize every time I talk to him, I have way more energy after than before the conversation. And so that for me is the most fun part of the business. But yeah, I mean, we have had a string of closings go through. Like, we've sold somewhere between 15 and 20 lots in the last 2.5 months. And so I'm just waiting to just get absolutely punched in the face repeatedly, because things just don't go that well. Granted, there was a big run of bad things before that, but yeah, owning a business is hard, and everyone comes to you with problems all day long. So that part isn't always fun.
No, it's not. But we're still learning. We're still growing. We hope you guys have enjoyed this more kind of conversational episode. We'll link some of the stuff that we're talking about in the show notes and everything, of some of the, our sales websites are really cool. We encourage you to check them out, and check out the team with AcreFi and see if that will help grow your business, because the dispo side of thing is everything. But at the end of the day, like, the reason we're still here is because we're still doing the exact same thing that we've been doing, just doubling and tripling down on it, and trying to, really focus on enjoying, the things that are enjoyable within life, and connecting the boring parts of business to that, in order to be able to sustainably run it. Because I think that a lot of people will realize running a business sucks. And if you think it's supposed to be fun, you're going to end up kind of screwing yourself over.
Yeah.
Anything you want to leave the
No, I
audience with?
agree. I think setting that expectation of it's hard work, but the outcome and what it can create is awesome and worth it. So yeah, I agree wholeheartedly there. But yeah, like Mason said, let us know what you think of these. Let us know if these are useful. But until next time, this is Dan Habercost and Mason McDonald with the Big Picture Blueprint, signing off.